Hey everyone, this is Dan with Data Trend. Today is Thursday, March 17th, 2016. It's about 3:30 p.m. or so Central Time. The market's closed a half hour ago. And we had another update today. We're looking at the S&P 500, the daily chart of the SPX. The market closed the day at 2040.59. It was up 0.66%. And we did finally come up here and fill this gap from January 4th today. We got up and pushed right up into that level. It was down around 2043 or so. We just kind of tagged it, and then the market pulled back later in the day. Um, and this pattern of higher highs and higher lows on the shorter term time frames continues. The 50-day simple moving average is actually starting to turn upwards right now. And so maybe there is the potential in here for the market to turn a little bit more sideways than anything. We could even go so far as to say that this whole larger pattern that we have here is really just sideways price action all the way back from 2014 or so. It's just been a really big sideways range, but it may still be a little bit too early to say that, and that we're not just in a broader distribution, but we'll have to wait and see. Um, One of the things I did want to point out is, so first of all, I did go ahead and adjust the April 5 CIB today, and the blue lines show the updated expiration break-evens for the position, and we'll talk about that in just a minute. One thing I wanted to note is that this recent move from the February lows all the way up to where we are right now here on mid-March, this has been about the past month or so, slightly over a month. This move has been about 13%. On a percentage basis, that's similar to this move that we saw here late in 2015. This was also about 13%. And then if we go back even further, back to 2014, there was this move, excuse me, in September, October that pushed all the way into November. And the market in this period ran a little bit further. This move was slightly over 14%. And so I'm not predicting that the market here is going to turn around or going to move sideways or going to break down or anything, but it's a good idea just to be aware that this is kind of the distance that the market seems to be traveling on some of these recent swings where it kind of runs into a little bit of trouble and needs to take a break. So I do think the potential for that exists and that there's a little bit more risk on the downside at this point. But certainly the market can continue higher and prove all of these previous swings wrong. There's nothing to say that that can't happen or that maybe it would have a minor pullback before heading higher. That's also certainly possible as well. The updated expiration break even for the position, the upper one sits right around the 2060 level. So if the SP trades up and through that 2060 level, we're going to be looking to roll up the lowest butterfly. And the lower expiration break even is now sitting down around 1958 or so, 1960-ish basically. Let's go ahead and drop down to the 65-minute time frame. And so this is kind of the pattern that we were talking about, on the shorter term time frames. We just see this consistent pattern of higher highs and higher lows. And so we can draw all of these areas as potential support areas or potential resistance areas, but the market continues to get above these resistance areas, find support at them, and then continue higher. And until that changes, there's certainly no reason to think that anything else is going to happen. But at any time that can change, and if it does, it's good to be aware of these levels on the downside. So going into the day tomorrow, one of the more minor support levels up here is going to be kind of in this 2020, 2025 neighborhood. So if the market comes down to there, that represents both this recent high and also the rising 5-day simple moving average. The 10-day simple moving average is a little bit lower than that. It's right around that 2010 level, which also corresponds to this previous area that's acted as support and resistance as well in the past. There is this unfilled gap down here, down in the low 1900s, 1990 to 1995 or so. Or I guess that's the low 1990s, not the low 1900s. But on a deeper pullback, we might expect to see that fill. And then I would say, kind of violating this level down here around 1970 or so, that would be reason to suspect that maybe we're going to see a little bit deeper pullback or at least more sideways action. Maybe we'd move into a period where we see something like that. And that 1970 level on the daily time frame is going to be all the way down in here. So that's quite a ways below where the market is right now, and it also corresponds to this rising 20-day simple moving average. So those are just some of the support levels to be aware of. The market is getting a little bit stretched in here. I mean, it just even visually looks stretched on the daily time frame, but there's nothing to say that it can't continue. So we'll be aware of that and just continue to move up on the upside, but it is probably good to be a little bit cautious at this point. So let's go ahead and take a look at the position. So this is the position as it sits at the close today. Yesterday we did do the reverse Harvey on it, so if you didn't see that, you might want to hop back and check out the video from yesterday. But today what I did is I added it's sort of a split strike condor, split strike butterfly, whatever you want to call it. and it was the 1955, 2020, 2025, and then the 2080 is the upper wing on this split strike butterfly or condor. And with that, I also picked up the 205 SPY call. And you can see here that I have the 1900 put being bought and sold for 344 and then sold out for zero. And this just represents the additional adjustments from the reverse Harvey. So those are all included in this picture as well. The position as it sits at the close today with the market here at 2040, the delta is negative 3.55, gamma is negative 0.03, theta is about just under $17 a day, the Vega is negative 65, and the open profit's about $1 now. So we're essentially sitting around break even, not much has changed. So this trade doesn't have quite as long to expiration. We're down to about 43 days or so. We started it a little bit later, so it's moving along a little bit faster, and it's been the T+0 line is rising more quickly. If we just step this out, even to say next Tuesday or something, we're in a position where we have some room to run both on the upside up to about 2060 and on the downside down to about 1960. So we're not in a bad shape at all at this point, and everything looks pretty good and healthy. But coming back to the daily chart, if we do push up into this 2060, 2065 level, I'm going to probably want to see the market really kind of hold in here before rolling up this lower butterfly. I'm becoming a little bit skeptical of this move higher, the higher and higher we go, just because I'm anticipating something like this to occur, or the potential for something maybe a little bit more sideways like this with some little pullbacks, I guess. And so I'm hesitant to take off this lowest position and roll it up, because if we do start to trade lower, one of the things that we can do is we can look to take off this upper butterfly, and then we'll end up back into that original butterfly, the 1990. And with the T+0 line as it sits today, probably the point at which that would make sense is going to be somewhere in the neighborhood of about 1980, 1985 or so. If the market was to trade quickly down to there, probably be looking at taking off this upper butterfly that we added today, selling out the call, and just moving back to the initial position, essentially, and going from there. And that would move the expiration break-evens back down to 2040 and 1940, which is where they were previously. So, at any rate, that's all I have for today. I hope it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com. And thanks for watching.